Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, last week I forecasted that we would have a really good week this week, and that's exactly what happened. If you've been following along with our weekly market report, you'll know that once I draw the lines on the chart, I leave those lines in place until the following week where we forecast out. As you can see from the diamonds, as I zoom in, this diagonal line right here was what I drew last week, and I said that we would most likely move higher, and the end of that line is my target. And you can see that today's high was right on that target number. So that was a perfect score on the forecasting. But what does that mean for next week? Well, I'm going to have to back out just a little bit to give you that story. You can see that we did break out of this resistance area very slightly, but we did so on lower volume. You see this small little red candle right there? That's a spinning top. And when you see that on lower volume, that tells us that the buyers are starting to lose some of that momentum, and it's a sign of indecision. The other signal that I'm seeing here that tells us we might be pulling back next week is the stochastics oscillator. You can see that over 80 right there, that's an overbought condition, and you can see that the K line, which is that blue line, is starting to move from an upward direction, starting to go sideways. So I'm forecasting that the stochastics will start to drop just like that. And you can see the CCI, which is a slightly more sensitive indicator, is starting to go lower as well. So I think the CCI will also drop. When the CCI drops below the 100 mark on this scale off to the right, that will generate a sell signal. So my forecast for next week on the diamonds is that we're going to pull back to the 20-period moving average and fill that gap right there. And so 80% of the time, once a gap is formed, it will fill. And then after it fills, there's an 80% chance that it will reverse from that point. Now, it's still too early to tell what's going to happen the week after next, but that's my forecast for the diamonds. If I go to a more broad-based index in the Russell 2000, that's ticker symbol RUT, you'll see again, my target was hit precisely. This diagonal line was what I drew last week when there were no candles here. And you can see again how accurate technical analysis is as a forecasting tool. Now, for the Russell 2000, we might go a little bit higher to test that resistance, but ultimately I think we're going to pull back again to that 20-period moving average, which is the blue line. The stochastics is also overbought. I think that will pull back. And the CCI is overbought. I think that will pull back. So that's my forecast for the Russell 2000. If I look at the spiders, ticker symbol SPY, you'll see this is the S&P 500 ETF. I said last week we would most likely break out over resistance, which was from the high right back there on March 21st. We did exactly that. And you can see that the stochastic is starting to lay flat. I believe that's going to start to pull back and move lower. The CCI is extremely overbought right now, and I think that will start to pull back as well. So I'm going to erase these lines up here, and I'm going to redraw my forecast for next week. Again, that being lower. And there's a gap right there that I'm going to draw a horizontal line from, and that gap will match with the 20-period moving average. So I think the SPY is going to pull back just like that throughout the week and move lower. So what does that mean if you're long any of these stocks? Well, a good idea is to protect your profits. I'm not telling you to get out and sell everything and move to cash, but it's not a bad idea to protect your profits, especially after a week that we've had this week. Now, if we look at the VIX, this is inversely related to the SPY. Interestingly enough, the VIX has a long shadow underneath there. Let me zoom in just a little bit more so you can see that. See this vertical line underneath that candle? That tells us that the sellers tried to push the VIX down but were unsuccessful and rallied it off the lows. Now, if the VIX is more bullish than bearish, like I think it is right now, I think the VIX will start moving higher, just like that. then that is negative, or that's bearish for the S&P 500. So the stochastic is starting to move higher. I think that will continue higher. And I think ultimately the CCI will start to turn up. These are leading indicators down here that help us determine the pressure of the market, both to the upside and downside. Right now, the downside pressure is easing up, telling me the buyers are starting to move in on the VIX. Remember, that's bearish, inversely related. Now, finally, the Qs. This is the tech sector. It's known as the power shares. And you can see, again, my forecast was spot on. The end of that line right here was my target. We hit that on Friday, and we actually hit it on Wednesday as well. I said that we would move up to resistance. That horizontal line right here is resistance, and I think that will hold. So I'm going to erase this forecast line from last week, redraw what I think is going to happen next week. I believe the Qs are going to do just that pullback, as well as stochastics and the CCI, I think, are both going to pull back. Now, if you'd like to learn more about what we do at The Market Guys, just go to The Market Guys website. You can click on the video tab. That will bring you to a library of videos that we call Market Shots, and you'll get some more lessons. Very short videos, about 7 minutes long. And if you're interested in my mentoring program, just click on the contact link right there, and you can send me an email. We have a waiting list. There aren't any openings right now, but we do have a waiting list. If you'd like to be put on that waiting list while you check out the service and learn more about it, then just go right ahead and send me an email. And they'll absolutely be able to help you with that. You could just ask Kevin and Jerry and Kim. We have David and Eric who enrolled in our program. Eric actually finished with our program, still making money with us, and we're all having a great time trading the markets. We focus on options. We'll start you at the very basic levels and build you up until you're comfortable with them, but I will absolutely not let you go until I am certain that you'll be able to do this on your own. That's what the mentoring program's about. So make sure you stay tuned to The Market Guys, and we'll talk to you next week. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.